Hello, everyone. This is Doug Davis, broker in charge at Columbia Realty, and here with another Ask Doug. And if you're enjoying these, please give us a thumbs up or subscribe to my YouTube channel. And so today, I wanted to talk about loan snafus, things that get people in trouble when they're applying for a loan to buy a house or condo or whatever it is. And I have today with us Duncan Hsia with Infinite Financial.
Hi,
And
Doug. Hi,
how are you
everybody.
doing? And he can tell us some simplistic, but if you're not in the business and just don't know these things, you might just do them. So these are things that have gotten people into trouble and sometimes without even knowing that they shouldn't do things. So, um, Duncan, why don't you tell us about yourself a little bit, your company, and how long you've been in the business and what you do?
Sure. Yeah. So I've been in the business about 13 years. I started Infinite Financial about 6 years ago. We're a brokerage. We work with dozens of lenders, both locally and nationally. We do all kinds of loans. Now we've grown to 11 loan officers on 3 different islands. And we do residential mortgages, all the normal conventional VA, FHA, USDA loans, plus portfolio loans, non-QM loans, reverse mortgages, commercial mortgages, HELOCs. We do all kinds of mortgages working with different lenders. And we can oftentimes do deals where other lenders cannot because we find ways to make things work. And we work with a lot more lenders than a lot of other people have access to. So we have lenders that can do a lot of different unusual types of financing that other lenders can't. So I also have my life insurance license and my financial advising license. The core of our business has been the mortgage business, but I can also offer life insurance and financial advising for customers as well.
Nice. So what loan snafus have you had over all these years with all your agents, and what crazy things have people done? Uh,
Well, most recently, the biggest issue that we've seen is people are looking to buy condos, and it's not so much the buyers or the agents, but the condos themselves don't have sufficient hurricane insurance. So that's probably the most common thing now, because at least last year, about half of the condos on Oahu didn't have sufficient master hurricane insurance, and that for Fannie Mae and Freddie Mac is a no-no. That you have to have 100% replacement coverage on the master hurricane policy. But after the Maui fires and after the hurricanes in the Southeast and elsewhere, and all the catastrophes we've had, a lot of the insurance companies have pulled out of Hawaii or have limited their coverage. So we have a lot of uh, condos that don't have the 100% hurricane insurance coverage because the insurance companies that they were working with didn't offer that anymore. And so in order to continue to offer that 100% coverage, they've got to raise the maintenance fees, pay a lot more, and pay sometimes as much as about 10 times more than they were before to get the coverage. And so it makes it a challenge for the HOAs and the boards to decide whether they raise the maintenance fees to make that work or violate the law and don't have the full coverage and make financing a lot harder. Fortunately, we can do the loans on almost all the buildings that have that issue, as long as they don't have other issues that prevent financing. And so it's something that we've been dealing with a lot recently. A lot of people come to us from other lenders that can't do the loans. We can, but usually it's going to be with a loan that requires a little more down, a little higher rate on a non-QM loan. One local lender actually just announced they're offering financing on those buildings as long as they were built since the year 2000. They're concrete, it's a primary residence, and only with arms with at least 2.5 points, and you got to put at least 45% down. So the options are much more limited when you have the lack of hurricane insurance, but we can do them. We can finance them and for decent terms with some of the lenders we work with. That's probably the number one issue that we've been dealing with recently. Now, and as
The big
far
one.
as the biggest thing that borrowers, when I first talk to them, probably the number one most common issue on the borrower side is their credit and getting their credit in shape. And so, one of the common things, I was just talking to a borrower the other day who they bought a car with a payment that's as much as some people's mortgages, like $1,400 a month. And when you buy a car, when you with a high monthly payment, even if you have a lease with a high monthly payment, that has to count into your debt to income ratio. So that can make you not qualify for what you're looking to buy, or buying furniture, or just carrying a balance on your credit cards can also make you not qualify because that can lower your credit score. So you want to get your credit score as high as possible before you buy a place and apply for a loan, because that will give you the best terms and the best chance to get approval on a loan. So some of the things
So do
commonly,
one loan at a time.
yeah, it's best to do one loan at a time. But we have had people with many loans, and we have had people with many loans on many different properties too. We do have lenders with loans. So don't think another fallacy is that you can't get financing if you have too many or if you don't have enough income, because we do have loans that don't look at your income. We have loans that will look at the income of the property that you're buying. If it's an investment property, we have DSCR loans, and we have loans that don't even require any income from the borrower on a primary residence or a second home. The rates are going to be higher for those loans, and the down payment and reserve requirements are going to be higher. But we do have loans for unusual situations like that, and loans for people with zero down. So you don't necessarily have to have. Another misconception is people think you have to have 20% down before they can buy, but you can buy with 3% down as a first time buyer, or 5%, or 3.5%, or even zero down with some programs. So there are options there for people to buy without the down payment, but the important parts are you have to have your credit score in order, and you have to have your income in order. For example, people that are self-employed, a lot of times they'll write off a lot of expenses, and so the tax returns will show zero or very low income, and they can't qualify based on their tax returns. But we have loan programs made for that, where they can go off of their bank statements and the cash flow in the bank statements. So we can get bank statement loans where we can go around the traditional restrictions of financing and use the bank statement cash flow to qualify someone. So people have been able to buy, close several loans like that to allow people to buy when they otherwise couldn't. And then we normally, traditionally, loans on the income side will look at your qualifying income, and it's pretty restrictive, and there's pretty strict rules. But there are ways we know of getting around those rules. We can create extra streams of income to make things work. Usually, or a lot of times, we can find ways to make things work and help people to qualify for a loan they otherwise may not have qualified for.
How about a technical thing like do you factor in like flood insurance, for example?
Yes, flood insurance is going to be part of the qualifying. They're going to look at your principal, interest, taxes, and insurance as part of the costs, as well as your other debts. And part of the insurance is flood insurance. And flood insurance can be very expensive. Now, a couple ways to lower the flood insurance cost. One is, in a lot of loans, we can now use private flood insurance, where you don't have to go to the major carriers. You can go to private flood insurance and get a lot of times a much better rate on your flood insurance, and that can help you qualify much easier if your monthly payment's a lot lower in the flood insurance. Another thing you can do with flood insurance is, if the base flood elevation for the property is at a certain level, and you can, the lowest floor of the house either is at or above, or can be raised above the flood elevation, then you can get an elevation certificate to have that flood insurance requirement removed. So you could be in a flood zone that requires flood insurance, but if the floor of the house is above the flood level, and you can verify that with a flood elevation certificate, then you can either have the map redrawn, or get the exemption from having to pay for the flood insurance, because in a flood, then you wouldn't get flooded because
Which
your house
I
is high.
believe is which I believe is 12 feet and above, you're out of it, is my
Yeah,
understanding.
Yeah, I think it does vary on the flood zones and the depends on the
Uh,
contours of the property.
so you want to look at that if you're a buyer of a property that's on a stream or near the ocean or on any sort of water or where water might be close to your property that you're buying.
Yeah, I used to live on a stream, and we had to hire someone to do a flood elevation certificate, and then we were able to waive the flood insurance requirement.
Insurance.
Saved us a lot of money every month. And then
That's
when
a
we
trick.
sold the
Yeah.
house, it made it more valuable too.
All right.
Yeah, some other things that we encounter, we deal with some buildings or either houses or condo units that are what you would call tear downs or not in great shape. And there are different ways around that too. Usually on a conventional loan or a VA loan, you have to have it in livable condition. It's got to not have any hazards. But there are different types of loans that you can get that can work around that. We have a lender that does loans that don't require an internal appraisal, and it's an exterior only appraisal. So we've had loans where the house was gutted on the inside, but it looks beautiful on the outside, and we were able to get loans with appraisals even appraised above the purchase price, and that's one way that we've used to resolve that. Another way is with a fix and flip loan. There are loans that are designed for people that will fix places that have issues, and they'll flip it within a few months. So there are loans that are designed for that too. And then you can just get a normal loan. And I just had one recently where we knew that there were some issues that the appraiser wouldn't agree to. So then the seller wouldn't do the fixes, but the buyer had a construction team, and he got the seller's approval to make some repairs. And then we had a normal appraisal done. The appraiser did say that there were still some other things that needed to be done. Buyer went in with the seller's approval and made those fixes, and we got the loan closed, and we got those fixes done during the escrow process. Sometimes we can have it done after the escrow process with an escrow holdback too. So there are different ways to do it. Another way is with a rehab loan, a loan that's specifically made for a house that needs to be rehabbed. So there are different ways to handle the properties that are in poor condition one way or another.
I've had a lot of sales with homes with no kitchens, and that's
Yeah,
always proved to be difficult. So you get
yeah,
secondhand refrigerator and oven. Maybe they took it out because they were going to renovate, but ran out of money or changed their mind, and but you
yeah.
need a kitchen to sell a house
Yep, we've
to
had
get a
deals like
loan.
that.
Yeah.
Another thing that we see quite a bit is where you have, especially on Oahu, you've got some houses that have two or three kitchens, two or three units, but it's officially a single family home. For the appraisal, before you have the appraisal inspection, you want to have either the oven or the refrigerator removed so that it's not officially a kitchen but a wet bar. Because if it's a single family home, it's not allowed unless it has a legal ADU. It's not allowed to have a second kitchen.
A kitchen, by the way, is defined by DPP as a refrigerator, uh, cooking device, and uh, a sink, a dedicated kitchen sink. You have those three things in one room. That's a kitchen. So I've
Right.
seen people put a soji door in front of the refrigerator with a lock on it, and it disappears. And so
Yeah.
you have two of the three, but you have to have the three to be a kitchen and for
Right.
appraisal purposes as well.
Yeah, so
So,
that's one thing is you want to prepare the property for the appraisal. Um, some other things, sometimes you'll have a shared roadway or a private roadway. You got to make sure that
oh, a lot of
that
that.
yeah, you have the documentation for that. Sometimes lenders require certain documentation for that, or require the appraisal to show the value of the percentage ownership of the roadway. And there's certain things that are required. That's not so much something the buyer would handle, but there's things that come up during the process that can require some additional
They
documentation.
might be involved in that.
It might be, yeah, yeah.
Yeah.
Other things that could come up if you buy a condo that has litigation or other issues
Mm.
that make it not qualify for a conventional loan. A lot of times we can get around that by getting a portfolio loan with lenders that have loans that don't have the same requirements that Fannie Mae and Freddie Mac have. So we're able to get condos approved, even though they have some feature that makes it unapprovable for a conventional loan. So there's a lot of ways we can get around a lot of the issues that come up,
Kind
but
of
there's definitely
endless.
some roadblocks that can arise.
It's kind of endless. Just all the
Yeah,
different
yeah,
things.
all kinds of things. And there's
All right.
encroachments. If you have something that encroaches
Oh
on
yeah,
the other neighbor's
encroachments.
property or your property, you can get some type of an agreement, or you can get title uh, to endorse over it. But you got to make sure the lender's okay with that. So that's another thing to look out, is that sometimes the boundaries of your property are not set and precise, and there's something that encroaches on one side or the other of that
You
boundary.
could have a very large rock wall that cost $100,000, $200,000 just for the wall, and it's not on your property, but you built it, or your whoever before you built it, and then the neighbor says, I want it off my property, and they
Yeah,
have that right. It's
right.
their property.
So you got to
That
make sure that everything's good with the neighbors. So you don't want to buy a property with that situation, and it
lender
has to be
won't like
resolved.
that.
Yeah, yeah.
Yeah.
Yeah,
Okay,
and
well,
then one other thing I want to mention is when you have a duplex or a legal duplex or a multi-unit property, some people don't realize that, but when you're buying with a VA loan or FHA loan, you've got to get condo approval, because that's officially a condo. Because if it's set up as multi units, you're not buying the whole property. You're buying one portion of it, and that's officially a condo. CPR, condo property regime in Hawaii. So we do have to get condo approval for VA loans on that type of a property. So that's something to keep in mind too.
yeah, little tiny ones might be more difficult.
Yeah.
Yeah. So, okay. Well, that's a more than a handful.
Yeah.
So for sure, if you're doing anything but a cookie cutter loan, you want to have someone like Duncan on your team to get a loan, because there are so many pitfalls that you probably don't even hear about, but they have to navigate in order to get your loan approval.
Yeah, yeah, and the great thing is that if we work with so many different lenders, if you go to somebody, if you just go to your local bank, maybe they can do a certain type of loan, but they can't do another type. But we work with dozens of them, dozens of lenders all over that specialize in unusual things. So if you can't get your deal done with someone else, we there's a good chance we can find a solution.
Wonderful. Well, thank you, Duncan. Love hearing about all those things, and I'm sure the people listening too will give pause on many of those.
My
And
pleasure. Thanks, Doug.
all right, until next week, if you have any property needs, buying, selling, or have property management needs, let me know. And if you have questions, always here to answer them as quick as I can on this channel. All right, until next week. Thanks so much.